Hi, this is Amelia. I am doing the Section 3, Example 5, and it can be found on page 151 of our textbooks. Okay, so we're going to be doing the journal, ledger, and trial balance for Ayala Architects Incorporated, since they were licensed architects on April 1st, 2017 during the first month of operations of business. The following events and transactions occurred that we are going to journalize. So first on April 1st, and as we put the date first, the stockholders invested $18,000 in cash in exchange for common stock of the corporation. So cash, the normal balance is debit, and we always start with our debit account, or the account that we're debiting. Okay, so cash is being debited by $18,000, and then common stock is being credited by the same $18,000. A little trick that I thought of was, if you can remember what cash is most of your transactions, you can remember which one is debited and credited, because cash is normal. Normal balance is debit. So if it's going up, it'll be debited. If cash is going down, it'll be credited. And the other account that's in the transaction will be the opposite. That's just something that helped me out that I thought I'd share. And then also on April 1st, they hired a secretary/receptionist at a salary of $375 per week, payable monthly. So since this right now does not affect our assets, liabilities, or stockholders' equity, this is going to be a no entry because it doesn't affect us right now. It will affect us at the end of the month, but because we'll have to pay her, but it doesn't affect us right now, so it's a no entry. Then on April 2nd, we paid office rent for the month of $900. Okay, so rent expense here is being debited by the $900, and cash is being credited because we are paying it out. So it's credited $900. On the 3rd, we purchased architectural supplies on account from Brigham Company of $1,300. So since this was on account, where it's not going to affect our cash quite yet, instead it is going to affect our accounts payable. But first, supplies are being debited by $1,300, and then accounts payable to remind us that we need to pay Brigham Company for $1,300, and so accounts payable is being credited. The next transaction occurred on the 10th of April. It says we completed blueprints on a carport and billed client for $1,900 for services. So once again, this isn't going to affect cash because we had to bill them. So it is accounts receivable that is being debited the $1,900, and then service revenue, because we report it as soon as we do the work, we have earned said revenue, and that is going to be, service revenue is going to be credited. Next, on April 11th, we received $700 cash advance from M. Jason to design a new home. So, since we did not, so first, cash, I guess, is going to be debited by $700 because we received that money. But since we have not yet done the service, we have a special account called Unearned Service revenue. And that is where we are going to credit the $700 because we've not yet earned the revenue, and it's to remind us that we need to still do the service. On April 20th, they received cash, $2,800 for cash for service completed and delivered to S. Melvin. So since they received the cash is going to be debited by $2,800. And then since we completed the service, it is going to be service revenue for $2,800. Okay, next on the 30th, we paid our secretary/receptionist for the month for $1,500. So wages expense is going to be debited for the $1,500 in cash because we paid that out. It'll be $1,500. And lastly, on April 30th, we paid Birmingham Company $300 for accounts payable due. So, since we are paying off our accounts payable is being debited the $300, and then cash is being credited to $300. Okay, now we're going to move each of the, or transfer these transactions onto the ledger. So the first is cash being debited $18,000 and common stock credited $18,000. So we go over here in cash. $18,000 debited. And then down to common stock, April 1st, credited $18,000. Next, we have a no entry, so we don't have to move that to the ledger. And then rent expense debited and cash credited $900. So we go down to rent expense debited $900 in cash credited the $900. Next, we have supplies being debited and accounts payable being credited $1,300. So supplies go to first. That happened on April 3rd. $1,300. And then accounts payable credited $1,300. And just to save time, I'm just going to fill in the rest of them. It's pretty simple. You do the debits first, and then you go down and you do the credits. So I've now transferred everything from the journal over to the ledger. As you can see, you have each transaction in there. So now what we are going to do is we're going to find the balance of each of our accounts. So basically, it's pretty simple. And the reason we want to do this is because it shows us if our company is doing well. Because, for instance, if the balance for cash is credited and not on the debit side where the normal balance should be, that means that we have overdrawn, and that is not good for the company, or that we have made a mistake as an accountant. So first what we do is we add up the normal balance side. So we add all of these up, and then we subtract this total from the total of the credit side. And for cash, that is $18,800. And the normal balance is on the debit side, so we are good with cash. A lot of these are very simple because there's only one transaction. And so all you have to do is just add up what that transaction is. So accounts receivable, balance is debit, $1,900, supplies, debit, $1,300. Accounts payable, once again, we take the normal balance side and subtract it from the other side. So that's 1,000. Example. Once again, we just take the one transaction that is there. So unearned service revenue, normal balance is on the credit side. Also with common stock. And for service revenue, since we don't have anything over here, and we probably never will have anything on the credit side, we just add this up, and that is 3,700. Wages expense, once again, we only have one transaction on the debit, normal balance side, and same with rent expense. So now we are done with our ledger. The last thing we do is trial balance. This is basically just to make sure that our debit and our credit sides equal, because that can catch some of the mistakes that we could make. So we go over from the ledger, cash, we put it over here. It is $18,800. And then we continue going through accounts receivable, 1,900, and so forth. Okay, so now that I have transferred everything from the ledger onto our trial balance, so we just basically, whatever the balance was, we transfer it over here. Make sure that it is in the right column, the debit and the credit. Now what we're going to do is we add up all of our debits together, and that equals 24,400. And then the credits, we add all of those together, and once again we get 24,400. Now this is important to make sure that the totals for your debit and your credit do equal, because for every transaction you are supposed to affect a debit and a credit. So this is how we know that we have done everything right. And I hope that this all makes sense to you. If you have any questions, please comment below, and good luck.